Dear students, you belong to semester 5. So this is online class. I am your Umar Shankar Shah. I will be taking up your class on valuation of goodwill and valuation of shares. And you as students, you have to mention your roll number, your contact number, and your name, and take very seriously online classes from very beginning, because you have got internal assessment. So your attendance should be forwarded to the respective authorities for keeping records. I will be taking up 45-minute theoretical class, both practical and theoretical. You will be getting 15 minutes at last for your doubt clearance. You raise your hands and put your questions after listening all theoretical and practical solution tips. As you know, valuation of goodwill is very important and significant topic, and goodwill is an intangible asset. The valuation of this intangible asset is unavoidable and indispensable for valuation of any kind of business. That may be sole proprietorship, that may be partnership, that may be company, whatever may be. Valuation of goodwill is a must. Then question comes up, what is goodwill? Simply lexicographically or according to dictionary, goodwill is reputation. And reputation can be purchased in course of business when you are interested to purchase others' business, existing business, that is purchased goodwill. And how the purchased goodwill to be calculated, I will discuss later on. And other is in-house hidden goodwill, that is in-house effects. Okay, when sole proprietorship business somebody is operating, or partnership business some partners are operating in a certain position, in certain locality, or in certain town, or in certain village, certainly earn some reputation by doing their business activities. That is called positional goodwill. And sometimes goodwill is earned through the delivery of services, delivery of goods, commodities, creation of good quality services, good quality commodities. So reputation is always earned through good quality business activities. It is not earned overnight. It needs hard work and dedication and ethical values of business. So it is very valuable. You can purchase any physical assets at any time when you have money, purchasing power. But you cannot purchase goodwill or create goodwill in an easy way. So goodwill valuation has to be made based on certain techniques, methods, because there is no hard and fast rule or hard and fast formula for valuation of goodwill. But there is hard and fast rule then when we are preparing financial statements, that is balance sheet, disclosure of goodwill, intangible assets when it is purchased, that should be exhibited. Purchased goodwill should be exhibited in the business, because certain amount of capital has been deployed or used in earning or in doing the business activities through that goodwill. And goodwill is the important intangible fixed asset that should be shown according to the caption of the balance sheet on the top of all assets. Okay. So we all know that goodwill is an intangible asset, which is non-current asset. This asset is significant, which means a firm to earn some extra profit. This extra profit is very important. How can you earn extra profit in competitive market? Because you are not doing business, or anyone is business may compete with other similar type of business in the similar markets. Sometimes when we calculate profit, that certain amount of supernormal profit is ascertained. All are operating, but some extra profits is earned by ethical values, by honest techniques of business. Okay. So these extra value, how it is generated, how it is created, that is very interesting aspects of goodwill. It is a financial value assigned to the reputation of the firm, which will be reflected for its excellent track of profit generation. So profit generation is normal process. Everyone wants to earn profit. Everyone is earning normal profit. But when extra normal profit is earned, that is super profit. Goodwill can be purchased or created in-house, that I told you. And factors responsible for goodwill: managerial skill, behavior of the owners, quality of goods, quality of services delivered, profitability of business, advantageous position, that is positional goodwill, exclusive uses of resources, good quality materials used, longevity of the goods. Risk part is also associated with the creation of goodwill, quality of better industrial relation maintained, corporate social responsibility. So many aspects can be involved in doing business. Okay, so all the parameters can be assessed in terms of value. If we do not ascertain in terms of monetary value, then it is very difficult to assess the value of a business. Any kind of valuation has to be incorporated with the valuation of intangible assets. Now, types of goodwill. As per Accounting Standard 10, goodwill is classified as self-generated goodwill or non-purchase goodwill. That I told you, in-house effects, in-house efficiency attached to your business. As for example, when you see some doctors are practicing in similar city, sometimes you will see some doctors have got long queue of patients, and some doctors have got very thin queue and thin amount of or thin number of patients. That is the quality, reputation earned by the doctors and quality of services delivered by that doctor. As for example, lawyers, champions, practicing lawyer, these are all professionals, okay, delivering services in this society. When you see the lawyers firm, criminal lawyer or civil lawyer, whatever may be, tax lawyer, so you are paying some hefty amount of fees to certain lawyer, and to certain lawyer you are paying low amount of fees, but that lawyer is not so reputed in the society. When the reputation earned by the lawyer is charging high amount of fees in order to reduce the rush of the people in the queue. And doctors do that similarly. When fees are higher, that certain number of patients think the lower amount of fees to the doctors or to the lawyer's chamber. That also the reason. But reputation high, quality is good, you have to pay price. When you purchase quality goods, you need to pay price. When you need to purchase good design of ornaments, you have to pay the value of labors. So in that way, the self-generated goodwill or non-purchase goodwill is created. Okay. Whatever may be the types of business, and purchase goodwill when existing business is purchased by some other form of business, there are certain difference between the payments compared to the purchase considerations. Purchase considerations, that means the value for the existing business has to be determined. When there is difference, there may be goodwill or maybe capital profit or capital reserve. And this part will be discussed in giving solution of practical problems. Methods for valuation of goodwill. Method 1. Average profit method. Goodwill equals to average maintainable trading profit into number of years. Very simple to calculate. Suppose 5 years, 10 years you have operated your business. You take the trading profit and sum it up, and after that number of years should be taken as the denominator. So numerator should be the sum total of certain years profit and divided by the number of years. You will get the average profit. And average maintainable profit should be calculated very simply, summation of P divided by N. N for number of years. By means of weighted average profit. Weight means weight is attached for certain years when business profits are not uniform. It is differing from year to year. You may attach certain weights and you can take the weighted average of profit. If the profit of past years fluctuating, then apply simple average. If the profit shows a steadily upward and downward trend, then apply weighted average method. Then question comes up how to calculate maintainable trading profit. As per books of accounts, you will see the profit. You take it. After that, with these book profits, add non-recurring and non-trading loss. You have to add. And add capital expenditures wrongly treated as revenue expenditure. Capital expenditure treated as revenue expenditure should be added. Add closing stock undercast and opening stock overcast. If closing stock undercast, you need to add. If opening stock overcast, you need to add with this profit. Less non-recurring and non-recurring income and gain. Less revenue expense wrongly treated as capital. It can be happening. Then you have to deduct. And deduct capital income treated as revenue income. You need to deduct. Less unrecorded revenue expense. Less closing stock overcast and opening stock undercast. When stock is overcast, I told you in case of closing stock, it should be added. In case of opening stock, overcast, it should be added. In case of closing stock undercast, it should be added. And vice versa. Less future maintainable expense. Then you will get profit before tax. Tax rate may be 40%, 50%, or 60%, whatever percent is given, you have to consider. But on an average, 50% tax should be deducted. That will give you profit after tax. Add interest on debenture and loans, then maintainable trading profit will be certain. This interest on debenture is very interesting when in the case of company, debentures are issued. So debenture is, as you know, fixed interest bearing capital. In the composition of capital or the capital structure of a company, capital gearing and leverage aspect is also very important. Sometimes when the company is not taking up any kind of loan or borrowings or issuing debentures, that is low geared company. That wealth maximization strategy has to be taken by the management by considering a certain amount of debentures for the expansion of the company or development. So expansion or growth of the company also depends on borrowings or issuing of debentures. And it should be remembered, when you issue the debenture, you have to bear fixed amount of interest. That's why it is fixed interest bearing. When you don't have any capacity, you cannot borrow. But when you are earning fabulous amount of profit, you are able to pay interest on debentures. And certain expansion path you are considering, that capital structure of the company can be thought of scientifically or rationally. So borrowing is not always bad. Borrowing is certainly certain time it is showing growth part. Levered company, highly geared company, or low geared company, and this is leverage, and the part of financial management depends on the scientific structure of capital. Method: super profit. Super profit, I told you what is super profit, that is extra profits added on normal profit. Normal profit means the similar company, similar business, similar sole proprietorship, partnership earning similar amount of profit in the similar market, that is normal. But when some company or some business house is earning extra profit from the same market, suddenly there is a magic of aspects, contents involved, that is efficiency involved. It may be managerial skill, it may be reputation by any means, by selling of good quality goods, by showing good behavior, good reputation with the customers. So this happen. So super profit method is also important. Annual super profit multiplied by number of years. Very simple. Super profit equals to average maintainable profit minus normal profit. Average maintainable profit minus normal profit. So what is super profit? Super profit is the difference between average maintainable profit and normal profit. Normal profit, capital employed into rate of normal return divided by 100, that is percentage. What is capital employed? Simply capital employed fixed assets plus working capital. All fixed assets should be summed up. With that, you need to add working capital. What is working capital? Working capital, difference between sum total of current assets minus sum total of current liabilities. So we exclude book value of goodwill from fixed assets, investments, non-current, also not to be included in assets for the purpose of goodwill valuation. Always we prefer market value, but in the absence of market value, we should consider book values of assets and liabilities. Okay. So average capital employed, opening capital employed plus closing capital employed divided by 2. Average capital employed, closing capital employed minus half of annual current profit after tax. or average capital employed, opening capital employed plus half of annual current profit after tax. I will give you screenshot while I will be taking Google Meet or any write-up modes. You follow the WhatsApp, you need it, I'll give you. But you need to listen very, very seriously what I am telling. Every word is important. 3. Capitalization of profit method. Capitalization of super profit method will give you valuation of goodwill. Goodwill equals to super profit divided by rate of normal return. Capitalization. When capital is 100, suppose normal rate of return 10, then 100 upon 10 into super profit, that is the capitalized value of super profit. Capitalization of average profit method, average trading profit into 100 divided by 10. Less capital employed. Goodwill will be positive value. Method of annuity. Method of annuity consider the time value of super profit. And time value of money is very important. And that's why annuity method is considered to be the best method for valuation of goodwill. Okay, because as you know, inflationary component or inflationary spiral always prevail in the market. So present value factor should be considered while you are considering annuity method for valuation of goodwill. Goodwill equals to super profit into PV factors of annuity. That can be given or that can be taken from the PV factor table. Okay. Purchase of goodwill method. Purchase consideration of business need to be considered. From that, less net assets taken over at present market value. What I told you, purchase consideration of business, that should be considered, because as per law there should be two parties, one is buyer, one is seller. So contract should be constituted as per agreement. Purchase consideration should be taken as the consideration for purchasing the business. If there is no consideration, no contract can be constituted. So consideration is must. When consideration is considered, from that consideration you have to deduct net assets taken up at market value. That will give you goodwill at positive